In this video, you will learn the best candlestick patterns to use for trading. First, we will cover all the good ones. Then we will cover the bad ones, which you should avoid. And then we will cover the ones which are irrelevant for crypto trading. Also, I will share with you some secret rules that you can use to avoid the bad versions of those patterns and to only take the good versions of them. All of the candlestick patterns, which I will show you today, they work on any time frame and also on any crypto coin. If you check on the internet for candlestick pattern sheets or overview sheets, most of them are actually very bad and with flaws and also inaccurate. For that reason, I made a very nice, complete, ultimate candlestick pattern sheet, which I will share with you for free in my next video. This was a lot of work, so I would appreciate if you give this video a like, and let's get started. The reason why candlestick patterns are so important is because candlesticks are the language of price action, and they show you exactly how buyers and sellers behave during each time frame. The better and the more nuanced your understanding of the candlestick patterns are, the better you can only take the winning trade setups and avoid the losing trade setups, which are invalid or weak due to a non-existent or a weak form of candlestick pattern. Essentially, those candlestick patterns are like your final signature, your final confirmation for taking a good trade, or your last warning sign to avoid this trade. Most candlestick patterns cannot be traded by themselves, but you should only trade them with other confluences, aka with other reasons to take the trade. Don't look at them by themselves individually. Always consider this together with other trade entry reasons. However, there are a few candlestick patterns which are so good that you could almost trade them without any other confluence. The first one and one of the most simple candlestick patterns is the engulfing. You have a bullish engulfing and a bearish engulfing. Let's go to TradingView and I will show you some examples. This right here is an example of a bullish engulfing. Essentially what this means is you have a bearish candle. In this scenario, it's a gray candle. And you have a bullish candle, which is bigger, aka larger than the other one. This bullish candle is engulfing the bearish candle. Most of the time, this means a momentum shift because the buyers are so strong that in this minute, because we are on the 1 minute chart, every candle is 1 minute. In this minute, the buyers are so strong that they completely reversed the momentum of the sellers in the previous candle. The opposite would be the bearish engulfing. Here you have a bullish candle and the bearish candle completely engulfs, aka is bigger than the previous one. There are two important rules which you have to keep in mind. The first rule is the bottom wicks of the engulfing candle and of the previous one in the bearish engulfing must not be long, which means if this bottom wick was very long and this one was very long, this would be invalid in a very weak engulfing. Also, if both candles are almost the same size, it's also a weak, bad engulfing. This here is a piano engulfing, and the reason why it's called piano engulfing is because essentially it looks like piano keys, which are equally long. This also is a weak form of an engulfing, and most of the time they are not as strong as if the other candle is significantly larger than the previous one. Two more examples. Here we have a bullish engulfing, we have a bearish candle and a larger bullish candle. What happens? Price goes up. Here we have another example. This would be a bearish engulfing. We have a bullish candle and a bearish candle engulfing, aka being bigger than the previous one. However, they are almost the same size, so this also would qualify as a piano engulfing. So this would be also a weak version, and I would avoid it unless I have other strong confluences to take the trade. This here would be a bad bearish engulfing. Why? Because like I said, the bottom wick is very long and both of them essentially are spinning top dojis. So both of them are mostly indecision candles because the buyers and sellers were fighting a lot up here and up here. And in the context of the candle size body, the wicks are way more dominant. So this here would be one which I would avoid. Right here, we have another bullish engulfing. But again, the issue is this top wick is very long. On the bullish engulfing, if the top wick is very long, or in the previous one very long, this should be avoided. On the other hand, on a bearish engulfing, the bottom wicks must not be long. The second candlestick pattern is the 3-line strike. The 3-line strike essentially is a strong version of the bullish or bearish engulfing. In a bearish 3-line strike, first you have 3 bullish candles followed by 1 big bearish candle engulfing the last bullish candle. This here is one example. We have bullish candle 1, bullish candle 2, bullish candle 3, and the last candle is engulfing this candle here. This essentially would be a normal bearish engulfing. However, because the other two candles were also bullish, this would be a 3-line strike. The same rules apply. These two candles must not be the same size, and the bottom wicks must not be long, aka the bottom wicks on here and here should be less than 30% of the candle body. So in this scenario, this would be a good, solid, clean 3-line strike. Here, also another example, we have here 1, 2, 3, and strike. The top wick, they can be long. However, the bottom wick must not be long. Why? If the bottom wick was very long, this would actually show you that the buyers are very strong and eating up all the downward momentum in the same candle. Another example is right here. 1, 2, 3, strike. Now this here is not a real proper candle. This would be known as a shadow candle because this has no body and also no wick. However, in the context, this still is a strong engulfing and in this scenario, valid. Another example here, we have 1, 2, 3, engulfing. In this 3-line strike, the bullish engulfing is so large that essentially it's engulfing all 3 previous candles, in this case even way more than 3 candles. However, this also is not ideal. Why? Because this bullish candle is so large that you are essentially already here at resistance, which means your risk reward is very, very bad. Because if you were to take a long trade, aka betting on the price going up, you have almost no room to go up and you have all this downside from the point on which you got rejected from. 2 more examples. 1, 2, 3, strike. What happens? Price goes down. 1, 2, 3, what happens? Price goes up. Also, same rule applies. If this top wick was very long, I would avoid it. The next 2 candlestick patterns are very interesting because most beginner traders actually get trapped. However, if you know what they mean and how to trade them, you can actually profit from beginner traders getting wrecked. We are talking about the hammer candle and the shooting star. Also, by the way, every bearish version essentially is the opposite version of the bullish. So essentially they are counterparts like yin and yang. This right here is an example for a hammer candle. A hammer candle is a bullish pattern. The hammer candle has 2 features. The first feature, it looks like a hammer, essentially small body and long bottom wick. And the hammer candle must have no top wick or a very small top wick. And ideally, the body should only be 30% of the entire candle or less. Essentially, the wick must make up at least 50, 60, 70% of the candle body, but ideally around 70% plus. Now, this here is a very strong one. Essentially, what this means is that the sellers pushed the price down all the way to here, but the buyers were so strong that in the exact same minute, they pushed the price way above the opening price. Because right here, the price opened. This candle at one point looked like a completely bearish candle, such as this one here, when the price was here. But like I said, the buyers kicked in and pushed the price up. So essentially, although most people thought that this candle would close bearish, it closed bullish. Most beginner traders would actually go short somewhere here, thinking that we have a breakout to the downside. However, once the candle is closing up here as a bullish hammer candle, all the short traders are trapped in a short and then they get wrecked and stopped out on the further up move. The best way to avoid getting trapped in a scenario like this is simply to wait for a candle close. I suggest never ever enter a trade while a candle is forming. Always wait until the candle is confirmed and fully closed. Here we have another example of a hammer candle right here. Now this one is not as strong because the body is very large. Now like I said, ideally the wick should be 60-70% of the whole candle size. However, what makes this candle interesting is that this at the same time is also an engulfing, because this candle is larger than this one. Here we have another very good example. We are coming down on the Bitcoin 1-minute chart, and then we have a bullish hammer candle right here, long bottom wick, small body, and minimal top wick. What happens? Price goes up. The opposite of a hammer candle is a shooting star. A lot of beginner traders also get trapped in a pattern like this. Here, for example, many beginner traders would actually go long somewhere along the formation of this candle, thinking we have a breakout. However, later, after this candle closes down here, essentially, they're getting trapped because what happens? Price goes down, which means beginner traders get wrecked and they lose money, and traders who wait for a candle close actually get to benefit from this, because this here would be, for example, a very good short trade entry. We have a strong move up, 1, 2, 3, 4, 5, 6, 7 candles, essentially a very long uninterrupted up move, followed by a very strong shooting star candle. However, like I said, you should not enter blindly based on this. You should have a context awareness of the whole setup and also other confluences for your trade entry confirmation. The shooting star has a very long top wick and no bottom wick or a very small bottom wick and a small body, which ideally should be only between 20 to 40% of the entire candle size. Here we have another example of a shooting star. However, this one is not as strong because the body is quite large. So ideally the body should be a bit smaller. Also very important, if the top wick was very small, like for example only half the size, this also will be very weak. Ideally, you have a very long wick up here because the longer the wick, the stronger the rejection. The next two candlestick patterns are actually very interesting because these two, the hangman and the inverted hammer, are essentially a weaker version of the hammer and the shooting star. If you check on the internet, in most candlestick pattern overview sheets, the hanging man candle actually is classified as a bearish candle and the inverted hammer as a bullish. However, in reality, the hanging man candle is mostly a bullish candlestick pattern and the inverted hammer mostly a bearish one. This also depends on the context. However, even if you completely ignore the context, in most scenarios, in about 70% of the time, the hanging man candle is a bullish candlestick pattern and the inverted hammer a bearish one. Let me show you an example. Right here, we have an inverted hammer candle. Essentially, this is the exact same thing as a shooting star, however, a weaker version. The candle opened down here, and in a shooting star, the candle would go all the way up here, the wick, and sellers would push the price down all the way past the opening price, aka this candle would close bearish, aka in a gray color. However, because the sellers were not so strong, it did close bullish, but in the context of the entire candle, this is very bearish because this means that the buyers pushed the price up all the way, but the sellers were so strong that they absorbed all the buying orders and they pushed the price down all the way again to almost the close. Inverted hammer candle, what happens? Price goes down. Another one, inverted hammer candle, what happens? Price goes down. Now here we have two very, very small ones. In this scenario, we did go up. However, the important difference is here we are coming from the bottom up, inverted hammer, then we go down. Here, like I said in the context, we are going down first and then you have this one. That's why, like I said, it's important that you understand in what context are you and what is the situation. However, like I said, mostly it is bearish. Let me show you some more examples. Let's just go and scroll right here. So here, another one, inverted hammer candle. This one is not as ideal because the bottom wick is also quite large, almost as large as the body. And also, this inverted hammer candle is happening inside a side move. Ideally, you come from the bottom, up, inverted hammer, down. Another example of an inverted hammer candle. We come up, one candle, two candles. By the way, this here is a 3-line strike. However, weak version because they are almost the same size. Essentially a piano engulfing. Also, second issue, this wick is very long. However, focusing on the inverted hammer candle, this is not so strong because the body is quite large. Like I said, the body ideally should be around only 30% of the entire candle. With the context that this here is a retest of the previous support, which we just broke, this is another confluence which adds to our trade setup. So this candlestick pattern is weak just by itself. However, with the context of this confluence of being a retest, this would be a valid trade entry of a break and retest with this candlestick pattern confirming our trade entry. So here on the candle close would be our entry, stop loss would be above the wick, and we could target, for example, the last wick low, and this would be a 2.5 risk reward ratio. This means if we risk $100 here, we would make $250. However, there's one issue. We are now on the Bitcoin 1-minute chart, and this was during a time when the volatility was very low. This means that the percent move is so small that this would not be worth trading. However, if you trade this on a different coin or on a higher time frame on Bitcoin, this would be the exact same thing. The next one we will cover is the hanging man. The hanging man is a weak version of the hammer candle. This here is a perfect example. Right here, we have a hammer candle, and right next to it, we have a hanging man candle. The look of the candle is almost the exact same. The difference is only the close. On the regular hammer candle, the price opened on the bottom. The sellers pushed the price down all the way to here, but the buyers were so strong that they absorbed all the selling pressure and the candle closed higher than the open. On the hanging man candle, we have the same scenario. The candle opened up here, the sellers pushed the price all the way down to here, but the buyers were so strong that they absorbed most of the selling pressure and pushed the price up all the way here. The candle is still closing a bit lower than it opened, but in the whole context of the entire candle, the pressure was mostly bullish. So the hanging man is a weaker version of the hammer candle. They both go hand in hand. They are like brothers and sisters. So this here would be a more preferred entry. This here is still a good entry if the confluence is very, very good. However, this one is a bit stronger. Here we also have another hanging man candle. However, the issue is that the top wick is quite large, and ideally on a hammer or hanging man candle, the top wick must be either non-existent or very, very small. Two more examples. Hangman candle, what happens? Price goes up. Next example, hangman candle, and we have a bullish engulfing. What happens? Price goes up. Here we have inverted hammer candle. What happens? Price goes down. Inverted hammer, what happens? Price goes down. Inverted hammer, what happens? Price goes down. Hammer candle, what happens? Price goes up. The next one is almost the same as a hammer candle and shooting star, which is the dragonfly doji and the gravestone doji. This candle right here in the middle is a dragonfly doji. This is a bullish candlestick pattern. Number one, you have a very long bottom wick and you have no top wick or a small top wick and a very, very small body. Here we have an ideal dragonfly doji. This candle has no top wick, no body, and a very long bottom wick. This is a genius example because most beginner traders would actually enter a short trade somewhere during the formation of this candle, thinking that this here is a bearish engulfing or a bearish three-line strike, aka 1, 2, 3 strike. However, like I told you, you should always wait for a candle close because beginner traders would be in a short right here, but then later get wrecked once the candle closes higher and the price goes up. So the short sellers are all trapped and are getting wrecked and stopped out. And the people who wait for a candle close would not take the short trade and would avoid this losing trade. Right here we have the opposite of a dragonfly doji, aka a gravestone doji. We have a very long top wick, we have no bottom wick or small bottom wick, and tiny body. In this scenario, all criteria are fulfilled. Here we have two more examples. Here we have a gravestone doji, and right next to it we have a dragonfly doji. Essentially, a dragonfly doji is a hammer candle, however, with a very, very small body. And a gravestone doji is the same thing as a shooting star, but with a very small body. And the hangman is the same as this, however, the weaker version. And the inverted hammer is the same thing as a shooting star, however, the weaker version. So these 6 candlestick patterns are like a big, beautiful family with 6 members. And these 4 are also a family with only 4 members. Now it's getting very interesting because now we are covering the 3rd strongest candlestick pattern that you can use for your trade entries. This one is called the tweezer bottom and tweezer top. As you've noticed, all candlestick patterns, they always come in pairs of 2 because they are essentially counterparts and opposites. So first, let's start with a tweezer bottom and tweezer top. Tweezer tops and tweezer bottoms are a very strong candlestick pattern. However, the only issue is they don't happen that frequently. They are actually quite rare. And there are only 2 rules that you have to follow to avoid the bad ones and to only take the good ones in consideration. The first rule is either the 2 wicks must be exactly the same length, or on the tweezer top, the second one can be a little bit shorter. However, the second one must not be longer. The second rule is that the wicks must be at least ideally 40-50% of the entire candle body. Now this one would fulfill the criteria because the wick is around 40% of the entire candle size. Here, not so much. However, the important part is the wicks and the last candle. Now this here would be a valid tweezer top. Not ideal because they're not exactly equal, but still valid because the second one is just a little bit shorter. So again, tweezer top, what happens? Price goes down. This candlestick pattern is so strong that if you trade the clean version of it, you could almost trade this without any further confluence and confirmation. However, to be safe, I recommend you trade this with other context and confluences. That's also why it's the 3rd strongest candlestick pattern in the world. If you were to translate this candlestick pattern into words, what it would mean, it would essentially mean that the buyers push the price up we got rejected, which means we got a considerable rejection inside the candle. And then we have a second attempt of reaching past the last high, but the sellers essentially rejected the price at the exact same or almost the same level, aka in this case a little bit even earlier, and they push the price down lower, aka the candle is closing lower than where it opened. This here essentially shows you that the conviction of the sellers is so strong that the exact same rejection level got reached in two scenarios. Also, if you combine this, for example, with an engulfing or three-line strike, so for example, if this candle was larger than this candle, this would be actually a tweezer top and a three-line strike. This here is a bad example of a tweezer bottom. The first issue on this tweezer bottom is that the bottom wick is actually a bit lower than the last one. And the second issue is that this candle is so large that essentially you are knocking straight at the door of the previous resistance, which means if you were to take a long trade, aka you enter after the candle close right here, your stop loss would go below the lowest two wicks. You would have no room to breathe and no room for the price to develop. So this here would be a horrible risk-reward ratio and not a good trade to take. However, as you can also notice, this would be also a three-line strike. Essentially, three-line strike together with an ugly, weak version of a tweezer bottom. This here is another example of a tweezer top. We have here an inverted hammer candle, and we have here a shooting star. Most of the time, the first candle is, in fact, an inverted hammer candle, and the second one is a shooting star. However, they are not completely equal. It is almost equal, and this here is lower, which means this one would be still valid. What happens? Price goes down. Here we have another good example. We have here a hangman candle with a long bottom wick, and here we have a dragonfly doji. You can see you can combine all those patterns together because essentially every candle type is always repeating itself. We can see the bottom wicks are almost the exact same length. Not quite. This one is a bit higher, which means it's valid. Again, if this one was lower, it would be invalid. Equal, confirmed. A bit higher, confirmed. If the wick of this candle was way higher, like for example up here, it would be invalid because then this would not be an equal rejection at the exact level. Now it's getting very interesting because now we are covering the second strongest candlestick pattern in the world. Now this here is also my second favorite, and because I love this pattern so much, I could make an 8-hour video only about this pattern and every single nuance. That's also why I will cover this briefly in this video and make multiple other videos only about this pattern. So let's get into it. We have the morning star and the evening star. This one is a little bit more advanced. However, once you figure out how to use it, you will love it. Let's start with the morning star, which is a bullish pattern, which most of the time happens when you have a move coming down and then a morning star. Essentially, the morning star and evening star is a reversal pattern. The morning star consists of three candles. First, you have a bearish candle, such as this one. Then you either have a dragonfly doji, hammer candle, or hanging man candle. Essentially any candle with a long bottom wick and ideally a small candle body, and ideally also not much top wick. And then you have a bullish candle engulfing this candle. Most of the time, a morning star will look like a U shape, such as here, bearish, we come down, we come up, rejection, and then bullish candle here. If you just remember how this will look like, you can trade morning stars and evening stars quite well. However, if you apply a few specific rules to the morning star and evening star on how to avoid the bad ones, you will completely smash it with this setup. That's why I will make a dedicated video only about this one, but this here is one example. If you were to put in words what this candlestick pattern means in terms of price action, we come down again. The buyers are so strong that they reject the downward momentum in the exact same candle, and then the buyers immediately reverse the move of the previous candle. Now this here essentially is a down move, a slow down, rejection, and then strong upward momentum. Now in this scenario, this would be also a three-line strike or an engulfing candle, because this here is engulfing the previous one, and because the last three, in this case even the last four candles, are bearish, you have a very strong engulfing, aka three-line strike, aka morning star. So this here is the first example. This would be the second example. We have a bearish candle, we have a hangman / dragonfly doji, and then we have a strong bullish candle. What happens? Price goes up. Here also, Morningstar, what happens? Price goes up. From a trade perspective, this one is a bit less ideal because this bullish candle is so large that essentially you don't have much room to breathe, aka not much room for the price to develop upwards. Here, for example, you have lots of room because the last resistance is right here, which means if you were to enter a long trade on this candle close here, and if you were to put your stop loss below the lowest wick, you would get a decent 2.2 risk reward ratio on this trade. The next example is right here. It's funny how we have three side by side. One, price goes up. Second one, price goes up. Third one, price goes up. Here we have a big bearish candle. Here we have a slowdown, and we have a bullish candle, aka a bullish engulfing, or in this case also a 3-line strike. We have another example just neighboring the other two examples, which is right here. Now this here is very interesting because this Morningstar at the same time is number one, a 3-line strike because we have one bearish candle, second one, third one, and one engulfing. So we have 3-line strike plus tweezer bottom because the bottom wicks are almost equal, aka this one is a bit higher, which means it's valid. However, the only imperfection is that this middle doji candle has a very long top wick. Now this here is not ideal, so this here is more like an indecision candle rather than a bullish hangman candle or hammer candle or dragonfly doji. However, in the context of this also being a tweezer bottom and also a 3-line strike, it is still a valid, strong Morningstar. And what happens? Price goes up. Here we have another imperfect example. We have a Morningstar, big bearish candle. Here we have an indecision candle. Now the issue with this Morningstar is, first of all, in the middle candle, the top wick must be either non-existent or very small. And the bottom wick must be medium or long. In this case, the top wick is way too long and the bottom wick is too short in comparison to how long the top wick is. Also, the next issue is on the bullish candle, the top wick is very, very long. This essentially is an inverted hammer candle, which is a very weak bullish candle, which means on a Morningstar, the top wick on the last candle and the top wick on the middle candle must be either non-existent or very small, aka 30% or less of the entire candle body size. Now let's find an evening star, and it's the exact opposite. So let's go around and check right here. They happen a lot more frequently than the tweezer top and tweezer bottom. Here we have an evening star, again, not perfect. We have a bullish candle, we have an indecision doji candle. Now again, the top wick should be very long. Here, the bottom wick is quite long, which means it's not ideal. And we have a strong bearish candle. However, since we have also an engulfing, in fact, a 3-line strike, we have 1, 2, 3, strike. This 3-line strike essentially evens out the imperfection of the evening star, because ideally, this bottom wick should be very small and this top wick should be very long. Evening star, what happens? Price goes down. Here we have another ugly morning star. What happens? Price goes up. Again, the top wick is too long. However, this is a tweezer bottom, and this morning star being also a tweezer bottom, this essentially is balancing out the imperfection of this top wick right here. This right here is a perfect example of an evening star. We have a strong bullish candle, we have a gravestone doji, and we have a bearish engulfing. Also, this would be a 3-line strike. So this here is the perfect look of the evening star. We come up again, the sellers push the price down, aka a slowdown in momentum, and then a strong move down. This also, by the way, is a Marubozu candle, which means there's no top wick and no bottom wick, which means that the downward momentum is so strong that there's zero fight here and zero fight here. Very nice evening star with 3-line strike with a Marubozu candle engulfing at the end. Right here on the left, we have another morning star. However, not perfect because the bottom wick should be ideally long and not up here. However, it still worked. Price went up. Also here, perfect evening star right next to side by side. Evening star, what happens? Price goes down. Strong bullish candle. Here we have our gravestone doji and we have our engulfing candle, which shows the reversal power of this pattern. All of these candlestick patterns, which I showed you so far, these ones up here should definitely be never traded alone. They should only be traded with a confluence and be used as a confirmation for another trade setup. However, these two patterns are so strong that you could technically trade them completely naked without any other further confluence if you apply a few more rules, which I will cover in different videos. about this one, and also in particular about the morning and evening star. There's one more candlestick pattern which is stronger than all other patterns combined, and because it is so important, I will make a dedicated video only about this one candlestick pattern. This pattern here is so strong that essentially you would not need any other confluence and you would do decently well just trading only this candlestick pattern. So stay tuned, and some of the people who are in the VIP Discord already know what this candlestick pattern is. In the description of this video, you can join the free VIP Discord group and trade together with other people who are trading this every single day. This here is the VIP Discord. In fact, actually, I'm doing a free 7-day bootcamp right now as we are speaking, taking 50 traders from beginners to intermediate. But like I said, right now, I'm not doing any more, only this one bootcamp. However, if I do any other further bootcamp in the future, I will let you guys know on YouTube first. Next, we will cover the bad candlestick patterns, which you should definitely avoid. Now, this one actually is really funny. This one is known as 3 white soldiers and the opposite 3 black crows. Again, if you check on the internet, this candlestick pattern is present in almost every single candlestick pattern overview sheet. However, it is completely horrible. I will explain exactly why. First, let me show you one, and then let me explain to you why it's bad. Right here, we have an example of 3 white soldiers. I have to smile because the name is very funny. So here we have 1 bullish candle, 2nd and 3rd bullish candle. The idea and concept behind this candlestick pattern is that you come down, and then you have 3 bullish consecutive candles after another, essentially showing a reversal in the price movement. However, the issue is, of course, that after the 3rd bullish candle closed, most of the time, you already surpassed a lot of price movement and you get a very, very late entry. And most of the time, actually, you will reverse by the time the 3rd bullish candle is closing. That's why on the first example, which I found on Bitcoin right now, it doesn't work. Because based on this pattern, you would enter after the 3rd bullish candle right here. Again, stop loss either below the last low or below the last candle. Here we have the opposite example. We have 3 black crows. We come up and then we have 1, 2, 3 bearish candles. But by the time the 3rd candle is closing, you already surpassed a lot of price movement and the reversal risk is very high. The first reason why it's very bad is number 1, you get a very late trade entry. Number 2, you have a very low risk reward because most of the time your stop loss has to be above the last swing high or below the last swing low. So for example, if you were to take a short trade after the 3rd candle close right here, your stop loss would have to be all the way up here and you would have to target a ridiculously large amount just to get a decent risk reward. Same thing goes for the other example which I showed you right here. Your stop loss would have to be below the last swing low and you would have to target a large far area just to get a decent risk reward. For the late entry and low risk reward ratio and also the high reversal risk, you should definitely avoid these 2 patterns. If you want, look at this yourself. Look at hundreds of examples. You will find that this pattern is completely rubbish, or in America you would say trash, or in France, à la poubelle. The second candlestick pattern, which is not very good, which you should avoid most of the time, is number 1, bullish Marubozu and bearish Marubozu. Marubozu in Japanese translates to bold, because essentially a Marubozu candle is a bold candle. Here, for example, we have a large Marubozu candle, aka a bearish candle without any top wick and also no bottom wick. Generally speaking, the idea and concept behind this candlestick pattern is that essentially you have a very strong, uninterrupted move either to the downside or to the upside. The reason why I put it in the category of bad is because just alone by looking at one candle, you have zero context of anything. If you look at any other candlestick pattern, many times, even if you leave out the context, many times it does work. However, with a Marubozu candle, it's just a candle without confluence. Lastly, we have 3 candlestick patterns which are completely irrelevant for crypto trading. We have the piercing, dark cloud cover, bullish harami, bullish kicker, bearish kicker. All these 6 are essentially the exact same thing, just a slight variation. So for example, this here would be a piercing line, bullish bearish harami, and bullish kicker, bearish kicker. On the piercing line, we have, for example, a bearish candle and a bullish candle, which is opening lower than where this closed. All of these 6 candlestick patterns, they all involve price jumps, aka price gaps. On the piercing line, for example, we have a bearish candle, which closed right here, but the next candle is not opening at the same level, but it is opening lower. Same as here, bearish candle, closing here, but the bullish candle is already opening higher. All of these price gaps or price jumps are extremely rare in crypto. These 6 candlestick patterns are mostly relevant for stock trading and futures trading, but in crypto, this is not relevant. So for that reason, you can ignore them and keep them out of your mind. In this video, I just covered the surface of candlestick patterns. You can go into way more detail and nuance of every single candlestick pattern and apply more specific nuanced rules to avoid the weaker version of them. I already covered many of those rules. However, there are many, many more. That's why for the best ones, aka tweezer bottom, tweezer top, morning, evening star, and this one, I will make multiple dedicated videos showing you many, many, many examples of good ones and bad ones. So what I suggest is you go on the chart, you pick any crypto coin and any time frame, and I suggest that you practice them, aka you try to identify as many as possible, because after a while, they will become second nature and they will jump out at you. This is exactly what we are practicing, like I said, in the free VIP Discord, where we are trading this with conferences and with other trade setups. If you have any questions, please comment them down below, and please don't feel overwhelmed because this here was a long video and lots of information. So if you feel this was too much, watch this video again slowly, or like I said, join the Discord and learn together with the other traders, because there are many good traders who already mastered this, who are killing this completely. I hope this video helped you in your trading. I would appreciate if you give this video also a like, and also leave me your feedback and questions down below. I will read every single comment and reply to you with all my heart, because I want to help you as much as possible. Thank you for watching. Make sure to subscribe, hit the ring bell. The next video is going to be a banger, so stay tuned. Thanks again for your support. I will see you in the next video. Peace.